why did the Fed cut rates by 50 basis points? In our view, it was 50 and not 25 because they know something is coming down the credit pike that the markets are not appreciating. I think they know that America, if it's not already in recession, will soon be. And they must have a fear of a war risk.
Monaco 64, home of alternative economics and contrarian views. So today we have Simon Hunt. He's been on the channel before. He's a world economic market and geopolitical advisor. You can find his work on simon-hunt.com. And he's based out of Dubai. And Simon, welcome to the channel again.
Well, thank you very much for having me. It's
It's
a
always
pleasure.
Yeah, it's always nice speaking with you, Simon. And let's start today with something that I touch upon in geopolitics, but I think you have like a really good view of it, seeing that you are like in the Middle East and you see a lot of stuff. And let's talk about the NATO and Russia because it seems, unfortunately, that the leaders of NATO, especially here in the UK and the US, uh, keep provoking and they want to keep this conflict in Ukraine ongoing. And I would say Russia has been really patient um, not to escalate into something bigger because I think they know that that's what the West wants. So let's start with that and then we'll move on to the markets and economy.
Right. Where do we start? Let's start with Russia and NATO. Clearly, NATO stroke Ukraine has lost the war in Ukraine itself. But there are informed suggestions that back in the second half of 23, that NATO began to prepare for a war directly with Russia. That occurred because by putting NATO troops in surrounding countries, particularly in the Baltic states and in Poland, and shifting a lot of military equipment, including missiles. Then what we have seen is that Ukraine stroke NATO, because any move that Ukraine makes needs the satellite images of America. So what we've seen, first of all, Ukraine had a policy to try to demolish Russia's oil refineries. So on our last count, so far 28 have been hit. Then just recently, there was a massive explosion at one of Russia's major armament and missile depots at a place called Toropets. From what we gather, it was a missile attack from Latvia where there are NATO exercises taking place. There are suggestions that what was hit was a major bunker housing nuclear missile stroke bombs. And that in order to penetrate that bunker, NATO had to fire either a thermal or a nuclear missile. These are rumors, of course, but they come from pretty reliable sources. So what one can say is that NATO stroke Washington stroke the UK have upped the stakes, trying to provoke Russia into making the first major move from which NATO can then launch their attack. But there was an apparent game changer following Biden and Lamy's visit to Kiev. When both arrived in Washington, it appeared that the power of decision-making had been taken away from state to the Pentagon. So there's a lot of chatter now that sane heads have come to the fore. On the other hand, sources in Moscow are saying this is only a temporary reprieve. So what one can say is that at some stage, the risk of a war over the next 2 to 3 years is very real. Whether it happens imminently is a different question. What we do know is that Russia has taken its gloves off in Ukraine and is now out to destroying all the infrastructure. And those NATO command and control bunkers that have not yet been destroyed. So then we shift to the Middle East. And here the situation is even murkier. Netanyahu is achieving his objective of pushing out Palestinians from Gaza and the West Bank. But the big issue is the northern border, where something like 80,000 people have had to have been evacuated over the last year. It looks quite likely that having caused chaos by firing the pages that Hezbollah and Lebanese people normally use is provoking a major confrontation. What I hear from reliable sources is that a lot of the decision-making is being taken by Mossad. Whether that is positive or negative, I can't answer. But the risk has increased that a war against Hezbollah instead of the skirmishes will take place. And if that is the case, it must extend into Syria. And if that happens, the risk is that Iran and Russia get drawn in. So those are risks. They are very real, but one can only hope that someone steps back and says, we don't want war. We know that Iran doesn't want a war, and neither do the other regional players. But powers that be in Israel, and especially Netanyahu, with the lawsuits coming up in December, raise the risk that we will have a major war. So, in summary, I do think that markets should start taking into account the risk of war either in Europe or in the Middle East, if not in both, will occur at some point over the next couple of years. And maybe it could even happen before the US election.
Interesting that you said this attack, latest attack on Russia, came from Latvia, which is, I would say, quite serious. Didn't even
came from Latvia.
Yeah.
Yeah.
Yeah, not even from the Ukraine. I mean,
No.
Latvia is part of NATO, isn't it?
I know. That's why I mentioned it.
Yeah, I didn't know that, but I guess looking back at history, whenever there are wars or run up to wars, yeah, it helps the military-industrial complex. But what we see during and after the war is a total disruption of world trade, disruption of currencies. There's a race to the bottom for currencies, and we're seeing that now, in my opinion.
It's one huge, big jigsaw puzzle. If war does break out, you have to ask the question, will there be an election? What we know is that the powers behind the White House throne don't want Trump in the White House, and they will go to any lengths to stop him. So far, 2 assassination attempts. A third is always possible, but I think unlikely as it becomes too obvious. So it's going to be an external factor. Is that a war? Is it a cyber attack that shuts down all computers? We don't know. But I think the risk is there. So who wins the election? No comment from my point. Except I come back that the powers behind the throne are going to do everything to prevent Trump from getting into the White House. So what does that mean? I think we need to look at why did the Fed cut rates by 50 basis points? In our view, it was 50 and not 25 because they know something is coming down the credit pike that the markets are not appreciating. I think they know that America, if it's not already in recession, will soon be. And they must have a fear of a war risk. I think probably the biggest fear that the Fed had or has is credit markets. And I think that if one looks at what's going on in private credit, I think that is where the risk is. And then if you look at the real economy, GDP has been inflated. If you take, there are two measures of spending in America, as you know, GDP and GDI. From the first quarter of 23 to the second quarter of 24, GDP rose by 2.7%, GDI just 0.9. Those are official numbers. And I gather that either today or tomorrow, the revisions to Q2 GDP will be coming out. So maybe we'll get some hints from that. So what does this mean in our view? Markets are looking for further rate cuts, which will probably come. So both equity and base metal markets will probably go to new highs by early next year, unless war intervenes. But let's assume war does not intervene, then that is what you're going to have. But what happens beyond, say, the first quarter of next year, I think is what the markets are not focusing on, which is actually that America goes into recession, markets fall very sharply, and so therefore will base metal prices. What does that then lead to? It leads to fiscal and monetary policy becoming extremely accommodative and will result in a resurgence of inflation, as we saw in the second half of the 1970s up until 1981-82. So with, in our view, food and energy shortages, the dollar falling sharply, we're going to see inflation repeat the levels that we saw when they peaked in 1981. Global inflation, I think it was 15% and the US CPI 13%. But what does that do to the bond market, to the long end of the bond market? Bond vigilantes will hate it. And you'll see US 10-year treasuries yielding over 10%. What will that do to a highly leveraged system? It will crash it. So really, really what we can divide markets up to, say, 2028 in three phases. The first is strong recovery to the early months of next year, followed by very sharp pullbacks because of recession and credit problems. Then central banks and governments throw everything into the pie, and we see inflation resurging, long end bond yields rising sharply, and then collapsing the system.
Yeah, because it's going to be hard for the Fed to keep short-term rates down if bond.
Yeah, sure.
And the other thing is the yield curve. Whenever the yield curve goes positive again, I think in the last four recessions, three times out of four, it took 4 months from when the yield curve bottomed in terms of inversion to when the recession started. And I calculated, I had a look at the chart, and I've spoken about this, that the inversion bottomed in July of this year. So if you add 4 to 7, that's 11. I mean, that means we'll probably see, well, we probably won't see the recession start in November, but they will announce maybe in the beginning of next year that the recession did start in November. And I noticed as well, since the Fed cut rates, that the curve is disinverting very quickly. I think we're now around 15 basis points plus.
Yep. If we're not in recession already.
Yeah, that's right. With all the, and I mean, your scenario is not discounting a major war, which would, I mean, make everything really difficult to.
Well, then you bring the crash that we've got pegged in for late 27, 2028. Then you bring everything forward to whenever the war starts.
Yeah, I think when World War I started, 1914, the New York Stock Exchange was closed, I don't know, for a month or two. I'm not sure, because it would have crashed completely. And talking about geopolitics, war, the dollar, gold, and silver, how do you see? Do you think the fact that the BRICS and other countries, BRICS plus, and the other 47, I think, that are going to be attending the BRICS Summit in October, do you think that's one of the reasons the West is pushing so much for conflict?
Yes, I mean, there are two fundamental reasons. The first is that Washington, ever since Brzezinski, has always said we cannot have one or more countries controlling Central Asia, i.e., the heartland. Must not happen. So what do we have now? We have basically China and Russia controlling the heartland. And the second reason, if BRICS is allowed to mature to the stage where they issue their own currency, their own ministries, that the new development bank becomes a real rival to the World Bank, then America and her allies cannot allow that to happen, because it will be the end of America's hegemony. So this is a real big reason why something major can happen between now and when the BRICS meeting starts on the 22nd of October. An event will take place that will make it impossible for the BRICS to meet.
Yeah, I think the West is desperate to try to disrupt the BRICS, and they might do it. I think they've already caught Argentina in their net. Uh,
Yes.
yeah, and I think they'll try whatever they can to divide the BRICS. But and I'm not taking sides. Like you, I'm just observing. And I think the major consequence, of course, we're seeing it already in the price of gold, that all fiat currencies are going down because
Yeah.
you
Yeah.
probably heard of the unit when you want to have 40% gold backing and then trade amongst themselves in their own currencies. And that's the threat to the US. So we're speaking here on the 23rd of September. So yeah, that summit starts in Russia.
1 month.
Yeah, 22nd to the 24th. So keep an eye on those days or keep an eye on anything right now in the next month, right?
Yeah. Yeah.
Yeah. So just a
It's
yeah.
interesting the comment you made that all fiat currencies are falling. If you measure them against gold, yes, they are. The only reason why they will rise against the dollar is because the dollar is going to be very weak. So all currencies are going to be falling, basically,
But the dollar will
or
fall
nearly
faster.
all.
I think the dollar, like you said, will fall faster because it has been overvalued for over 53 years via
Yeah,
the
I agree. Yeah,
yeah,
yeah.
yeah.
I think and maybe this will come out at the BRICS meeting. I do think the day will come, maybe at the BRICS meeting, when China announces our currency is supported by the gold which our citizens own. And they will then give the figure, which will be around 25,000 tons. That, of course, would completely upset the Western's apple cart.
Yes, and I think they've been trying to keep low key about that amount, the 25,000 tons, so that it gives them time to accumulate even more. Because I think ultimately it's a financial war. And would you say the 25,000 tons includes the People's Bank of China gold as well?
No, that's separate. The 25,000 tons plus is what has been bought from the Shanghai Gold Exchange since it was opened, I think it was in 2002. On top of that, China's government owns, in round numbers, another 25,000 tons, probably most of which is actually owned by the PLA. Anything the PLA imports is not recorded in customs statistics.
So that
So
two,
what the PBOC owns is only a small fraction of the total.
yeah. And I think the same could probably be said for Russia.
Russia, on our analysis, owns um, north of 12,000 tons.
And the US, well, supposedly owns 8.3 thousand tons, which
Yeah.
hasn't really been audited in a long time. And UK has 306 tons, which isn't that much. But the Bank of England holds about 4,800 tons for other countries, which I think is crazy for countries
Well,
to.
I think the other countries are stupid.
Yeah, yeah. I mean, Argentina just sent their gold to the Bank of England, and they only
Well,
have
that tells you they're in bed with Washington.
yeah, I mean, and the Argentinians only have 60 tons, and you'd think, well, that won't make a difference. I think it's telling us that the London bullion market is really leveraged, and they're desperate, and they're scraping the
Yeah,
barrel.
yeah,
Yeah,
yeah.
yeah. So, Simon, have you got any final thoughts for the viewers? I mean, we have people from all backgrounds and from all over the world on what they could do, they should do, in your opinion, to kind of survive or maybe even thrive during these uncertain times.
Well, first of all, play the cycle. Don't be the last guy dancing on the dance floor when the music stops. Every dip in the gold price, buy gold. Make sure that you have a lot of food supply, not just for 1 or 2 days. Make sure that your water supply is secure. Where you live, of course, is important. A lot of people in the UK are considering moving out of the UK for obvious reasons. If there is no war, I warmly recommend you buy where I live. It's 100% safe. It has world-class medical facilities and schools. And it's a very habitable place to live. And it is easy plane rides to most places in the world. And of course, tax is another good reason.
Almost non-existent, right?
Yep.
Yeah. Okay. Simon, it was great speaking with you, and let's hope the war scenario doesn't play out. But I definitely think you're right. The next month could be very interesting, not just because of the BRICS, but because of the upcoming elections in the US. So with that, I'm going to wish you, all the best, and hopefully we'll talk again soon.
Thank you very much for having me. And see you next time.
See you next time. Take care.
Cheers.
Cheers.